I think that Bitcoin is going to have a very big year. I think that, it could easily double from here this year with all the tailwinds that I've been talking about. It's been consolidating for a while in this $90,000 to $100,000 level. And that's important. It's healthy. It's good. That means that you get all those sellers that were kind of waiting for that $100,000 level, get them out of the way. And then you're going to have a pocket there where it jumps to the next level mentally. $100,000 is a huge mental level. And it's tried to break through it a number of times now. But once it breaks through and stays through, breaks that 120 level, and then it comes back to 105, and that seems like a deal again, then that's where you really see it take off, Alan. I believe that, I've been saying $180,000 in the fall of 2025 for a while now, and I think that that's still very much in play, and Bitcoin is explosive.
James Lavish draws attention to a significant fact in the current financial environment: the growing institutional acceptance of Bitcoin. He notes that for smart investors, it is now a strategic allocation rather than merely a speculative asset. Bitcoin has continuously raised the Sharpe ratio, a crucial indicator of risk-adjusted returns, which has enhanced portfolio performance. Even a little Bitcoin allocation increases total returns without introducing undue volatility, as historical data now demonstrates. Institutional investors are starting to follow suit as companies like MicroStrategy continue to set the standard, recognizing Bitcoin's twin function as a hedge and a high-growth asset. According to Lavish, the discussion has moved from theoretical argument to empirical evidence, and Bitcoin is now a crucial factor in contemporary portfolio management. Please remember to like this video, subscribe to our channel, and enable post notifications if you have a strong interest in learning about the future of finance and the function of digital assets like Bitcoin. This will ensure that you never miss anything. Thank you, and enjoy the video.
What we see is a ton of opportunity in the space. We're super excited about how many opportunities we have, and exactly what you just said. We see institutions coming in and wanting to hold Bitcoin, but they're wanting to hold MicroStrategy. They're looking for ways to augment their returns, and they know now, looking back on the returns of the past, decade, if you added Bitcoin to your portfolio of other investments, it would raise your Sharpe ratio undoubtedly, and which means it would raise your risk-adjusted return to your overall portfolio. Your returns would be higher, and your volatility would go up a lower amount, meaning that your risk-adjusted return would be better. So even if your volatility goes up a little bit, which is not really that much, if you have a reasonable percentage allocation to it, then your risk-adjusted returns are better, and that's a really big focal point for institutions. And now we're seeing institutions come into the space. If you look at IBIT, or if you look at the ETFs, not just IBIT, but Fidelity and Bitwise and the other ones, you've got these massive institutions coming in that you're seeing. Some of the largest holders of these ETFs are like Citadel, D.E. Shaw, Schoenfeld, Tudor. You've got State of Wisconsin's one of the largest one. Morgan Stanley's very large one. You're seeing banks come in and holding them. You're seeing banks come in and buy MicroStrategy. You're seeing massive funds that people don't even know of. Like one of the largest holders of all the ETFs is a firm. It's a hedge fund called HBK. Harlan Cornelius is an old firm. He's no longer there. It's now being run by the managing partner is Jamil Akhtar. He's a colleague of mine from the Fort Worth Dallas Fort Worth days, but they're a massive holder of this. Nobody would know who they are, but they have over $20 billion of assets, and they're buying Bitcoin because they know that it will be a strong diversification in their portfolio and likely augment their returns. I haven't talked to Jamil in a while, but that's my guess. And so that's like one institution nobody would have even heard of, but it's a massive hedge fund. They're quietly, have been accumulating. And now you're hearing about banks accumulating Bitcoin. You've got, we saw I think there was another announcement this morning of bank buying. Was it the Swiss bank? You've got, and I've got to bring it up. I can't remember who were the big banks. Yeah, it was UBS. So you've been seeing big banks like UBS was announced. You've got Cantor Fitzgerald. You got Bank of Montreal. These are massive banks that are all buying MicroStrategy. I do think that this is going to continue. If you just strip out all the noise of the economy and you just focus on Bitcoin, I think that Bitcoin is going to have a very big year. I think that, it could easily double from here this year with all the tailwinds that I've been talking about. It's been consolidating for a while in this $90,000 to $100,000 level. And that's important. It's healthy. It's good. That means that you get all those sellers that were kind of waiting for that $100,000 level, get them out of the way. And then you're going to have a pocket there where it jumps to the next level mentally. $100,000 is a huge mental level. And it's tried to break through it a number of times now. But once it breaks through and stays through, breaks that 120 level, and then it comes back to 105, and that seems like a deal again, then that's where you really see it take off, Alan. I believe that, I've been saying $180,000 in the fall of 2025 for a while now, and I think that that's still very much in play. And Bitcoin is explosive. The one thing that you have to understand is if you're trading around this, please have your core position. Don't play with the core position because you could easily miss out. This could easily just outrun everything very quickly.
James Lavish examines the intriguing but improbable idea that the U.S. government would purchase Bitcoin with Exchange Stabilization Fund funds. Even while he believes that this is a low probability event, he admits that it would be revolutionary if it did occur. Theoretically, the ESF, which has roughly $200 billion in assets, might invest part of them in Bitcoin, which would cause an instant supply shock and raise prices. However, Lavish highlights a significant drawback. Politicians are unlikely to take this action since it might indicate a decline in the value of the US dollar. Also, a quick reminder, only a small percentage of viewers are subscribed. If you enjoy deep dives into crypto and finance, hit that like button and subscribe. It's free and helps the channel grow. Now let's get back and hear what he has to say.
And if you look back over the years, I think it's like 10 days out of every year that Bitcoin makes its gains. And so you just can't, you have to be allocated to it. You can't miss those 10 days. That's how volatile this thing is and how explosive it is to the upside. It's possible that you could, that he could, use the Exchange Stabilization Fund in order to buy Bitcoin. Now, there's some differences here, though. So he did it through executive order. That executive order could be overturned by the next administration pretty quickly, I would think. So that's one thing. So it's not really as powerful, but it's quicker. He could do it overnight and start accumulating Bitcoin immediately, And so what does that look like? Well, there's $200 billion in that fund. But that's not all available for Bitcoin. There might be 40, 50 or 60 billion available, maybe as much as half of it. But you're talking about, it's still a lot of Bitcoin, $40 billion. And let's say that they pass it and Bitcoin runs. I mean, it's not going to be at 120,000, that would mean that we're probably only buying 250,000 Bitcoin instead of 1 million. But we would be buying it quickly, maybe half a million Bitcoin, but likely not. If he announced that order, that Bitcoin's going to, it's going to run pretty quickly because of what you just said. Everybody and their, sister and brother are going to be out there buying it, not just other nations. And so, you'll see a supply shock. The big thing is not so many people out there buying. It would be a lot. It would be the other half of it is people be reluctant to sell. Like I'm not, if the government's gonna be out there buying, I'm not going to sell mine. So there would just be this liquidity issue. It would be a squeeze. And so, that's one path. I think it's pretty low likelihood because, you'd have to, there's some reasons for that. If he did that, he would be signaling to the world that he's worried about the US dollar, exchange stabilization. And we have to stabilize our currency, that's a bad signal to the world. And that might send the wrong signal on the US dollar. So that would be worrisome. And I think he's probably reluctant to do that, even if it is something he could do. Because, he doesn't want to Trump really cares about his legacy, about how he's seen. He wants the market to be at all-time highs. I'm sure I know his family owns some Bitcoin. He wouldn't mind that. And I'm sure he wants his Trump coin to be at all-time highs. He's got a huge ego and he wants he talks about the market all the time. If he initiated the exchange stabilization fund to buy Bitcoin through an executive order, I mean, that might tip off a sell-off in the markets, in the general markets, because, oh my God, I don't want to own US dollars. Even the government knows there's a problem because of all this debt. Because all these years we've been talking about debt. We've been talking about debt for decades and how it's a problem. It's never been a problem. So when you hear traditional market analysts talk about it, they're like, we'll deal with it like we always have, no big problem. It's just debt. It creates productivity, and which part of that is right? Okay. It is true that debt creates productivity. It brings future productivity into the now, but irresponsible use of debt doesn't. And so that would tip people off to that problem. And then that means he and his cabinet would probably be reluctant to do that. I mean, what would be the point? Just to get Bitcoin to go up? I don't see that.
James Lavish explores an intriguing theory, the potential for the U.S. government to purchase Bitcoin with the Exchange Stabilization Fund. He recognizes the possible impact, even if he believes this to be a low-probability situation. Theoretically, between $40 and $60 billion of the $200 billion that the ESF now owns could be devoted to Bitcoin. A significant supply shock could result from this, sharply increasing the price of Bitcoin. However, Lavish draws attention to a significant worry. This kind of action can give rise to concerns regarding the stability of the U.S. dollar. The government would essentially be acknowledging that the dollar's worth is in danger if it used the ESF to buy Bitcoin, which would probably make people less trusting of the US currency. This could therefore lead to a sell-off in the wider markets, rendering the move unfavorable from a political and economic standpoint. Theoretically, it is feasible, but Lavish believes that the substantial risks to the dollar's reputation make it an implausible course of action. Lavish provides some helpful guidance for anyone wishing to invest in Bitcoin. He emphasizes how crucial it is to begin, even with a modest budget. As they gain more knowledge about Bitcoin, many new investors start with a tiny portion of their portfolio. He argues that when people learn more about Bitcoin and its advantages, their initial 1% investment may increase to 3%, 5%, or even more as they realize how valuable it is to own this virtual asset. Lavish emphasizes that the ultimate goal is to own Bitcoin directly, where investors hold their own private keys is the most secure way to own Bitcoin. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.